Hey, good morning, everyone. I am Faisal Mohid, Director of Capital Planning here at Valley Bank. I also have the honor of serving as Regional Vice Chair for Valley's Asia Associate Resource Group. Thank you all for joining us this morning for our seventh installment of our Access to Capital Financial Empowerment Series. Our Access to Capital webinar series is aimed at equipping you with the knowledge and insight necessary for your path to success. For each installment, we assemble panelists of Valley Bank and local community leaders who can share their perspective on the challenges business owners in historically marginalized groups face and the options that may be available to help overcome those challenges. On behalf of the Asia ARG and Valley Bank, we are excited to share with you today invaluable insights from our community lending and business banking teams, and showcase the innovative and transformative products that Valley has to offer to our customers. We encourage you to participate in the discussion by submitting your questions to the Q&A feature, and feel free to share your thoughts in the chat throughout the presentation. Now, to kick off our presentation, I'll pass the mic to Chris Forno, Head of Funding and Liquidity here at Valley Bank. Chris, all yours.
Thanks, Faisal. Good morning, everyone. As Faisal mentioned, my name is Chris Forno, and I'm the Head of Funding and Liquidity here at Valley Bank. It's a pleasure to be here with you today, enjoying my Valley Bank colleagues as part of the Asia ARG group. We've got an exciting topic for you today, access to capital and the importance of selecting the right banking partner. You know, when I think about selecting the right banking partner, I found it helpful to frame it using 4C's approach. First one, capabilities. Does your bank have the full suite of services and products to help you achieve your business goals? Capacity. Does the bank have the depth and breadth to accommodate your future growth? Continuity. You're in business for the long haul. Your bank should be as well. And comfort. Does the bank have the expertise, experience, and nimbleness to meet your small business needs? In my segment, I'm going to focus on how Valley addresses these points as a $61 billion bank. Kennedy, please proceed. Okay, on this slide here, what we're presenting is Valley's highly diverse loan portfolio. Oh, I'm not catching up yet. Sorry, I apologize. We're starting with the customer deposit base, right? Diversity is central to everything that we do here at Valley in managing our balance sheet. Starting in the upper left-hand chart, you can look at how do we think about total deposits at Valley. Deposits has been the key theme in 2023, and it's very important to us here. When you look at $50 billion in deposits, we are a commercial and consumer branch-oriented company. You could see here that we have 63% of our total deposits in a branch network in 4 states of New Jersey, New York, Alabama, and Florida. We also have 2 other components here that I'll talk about momentarily in specialized deposits and access to a highly diversified indirect customer group as well. Down below in the lower left chart, you can see that diversity by geography is very, very important to us. We are headquartered in the state of New Jersey. So as you may expect, we've got the most branches and most deposits in that state, followed by Florida with nearly 8 billion, New York, nearly 5 billion, and Alabama, about $1.5 billion. So totally those branch deposits are $31 billion. And that becomes very important because from a deposit perspective, those branch deposits are considered to be very stable, and stability is important to the sustainability of a bank going forward. And in the upper right-hand corner, when you think about how we manage risk at Valley Bank, you know, one of the things that we're very sensitive to is, you know, making sure that the level of uninsured deposits is a low percentage of our total deposits. And you can see here it's at 23%. So that's below some of our peer group. And then we make efforts to cover the uninsured deposits. And you can see here that we've got capabilities to cover that over 2x. Down in the bottom right, when I spoke about specialized deposits, this really speaks to the growth and further diversity of sources here at Valley Bank over the last 5 to 6 years. You can see we've got national deposits, cannabis, and our online segment that are generating over $3 billion in deposits. We've got an international segment at nearly $1 billion, a technology segment at about $1 billion, our private banking and wealth department at nearly $2 billion, and collectively that's about $9 billion. So key message that I'd like you to take away from this slide is that Valley as an institution invests a lot of time and effort in diversifying its sources of funding. Kennedy, next slide. So here, just getting a little bit more granular for you, because what's been real big topic recently is that source of deposits and where you're moving in. You've got commercial representing probably a third, consumer at a third as well. That fully insured, FDIC insured indirect is about 20%. And then we have a large government or public deposit segment at about 10% of it. Drilling down a little further, you could see over in the right-hand table, when we think about our commercial industries, certainly we're a real estate company, so that's the largest component at 7%. Finance and insurance really comes through what we were talking about earlier in the specialized industries. And then you've got other segments that comprise between 1% and 4%. So the key message again is thinking about how Valley diversifies its sources of funding to not only effectively operate in a normal operating environment, but really to help us navigate through turmoil that may appear from time to time in the marketplace. If we're better prepared in a business as usual environment, then our thought process is we're better prepared to handle any disruption that the market may toss our way. Let's move forward to the next slide, please. So the next slide really shows you the other side of the balance sheet, because diversity comes in a number of different forms. And what we're illustrating here for you today is how we think about the asset side of the balance sheet, how we've positioned the balance sheet for continued growth. You can see that in the upper left-hand chart. You can see that the annualized growth from year-end 2022, we've got annualized growth in 2023 of about 9%. So we've got over $50 billion in the loan portfolio. The diversification is illustrated in the pie chart over to the right, upper right. You can see, yes, we are a commercial real estate company, about 47%. But let's look at the other areas that we're in. We're in healthcare, we're in owner-occupied CRE, we're in C&I, we're in consumer, we're in resi, we're in construction, we're in multifamily. So it's very important for us as an institution to make sure that not only the funding resources that are made available to help fuel this growth, but also that we're deploying that funding in a diverse set of segments, as well as a diverse set of geographies. Down below, we'll just give you a little insight into how we think about new loan origination. Key topic today has been interest rates. We spend a lot of time managing our interest rate risk exposure here. We believe that our clients are beneficiaries of how well we're able to do that. And you can see over in the bottom right table here, that's just a measurement of how our loan prices have moved year over year as measured by a beta. You can see as of Q3 2023 in the bottom, it's about 43%. So, in the end, my hope is that you could see diversity in business segments and our financial sources is a cornerstone of Valley's strength. Now that concludes my segment of the presentation. I'll certainly be available for questions at the end, but now I'd like to pass the mic to my colleague, Chavez Ewan, Community Lending Development Officer.
Thank you, Chris. Hello, everyone. I'm Chavez Ewan from Community Lending Group of New York and Regional Vice Chair of Asia ARG. It is my pleasure to be with this morning joined with Mike Warrington, Regional Director of Community Lending of New York, and Melvin Madera, Business Banking Sales Manager of New York. Good morning.
Morning, Chavez.
Good morning,
Morning, team.
Chavez. Good morning, everyone.
I think the first important question is, how does one differentiate between community lending and business banking? We'll start with Michael. Go ahead, Mike.
Sure. So community lending is the part of the bank that deals specifically with women and minority-owned businesses, as well as non-minority-owned business owners. And just by way of background, this division was created as a result of our participation in the PPP loan process, where Valley was a huge player. We did over $20,000, over 20,000 loans for about $3 billion to customers and non-customers. And in doing that, we realized that the small business owner was really underserved. They didn't have access to capital, as we were going to talk about and address, but they also didn't have the infrastructure to take advantage of the PPP loan process. So we partnered with nonprofit organizations to address that as well. So in regards to access to capital, and particularly with community lending, our loan products go from $5,000 to $100,000. And we came up with that number because we realized that the small business owner needs something within that range. And anything above that will be handled by Melvin's group, and I'll turn it over to Melvin to talk about that. As Chris talked about the health of the bank and our footprint, New York, New Jersey, Alabama, and Florida, we have teams in community lending in each of those marketplaces. And the teams consist of experienced bankers who have background in commercial lending, retail banking, as well as community reinvestment activities. So that's community lending in a nutshell. And I'm going to turn it over to Melvin, and we'll go back and forth about how we handle our business segments.
Or Melvin.
Thanks, Mike. Really, we do a lot of the same here in business banking. What differentiates us typically is revenue sizes of the businesses that we deal with, right? So typically I'll work with businesses, say between $3 million to $25 million in revenue. And of course, Mike will work with business revenue sizes below that. Loan sizes and the loans that we typically work with, again, whether it's lines of credit or working capital lines, equipment financing, things of that nature, we can both do that in both sides of our business. It's typically just, I'll deal with perhaps a more mature business, and on Mike's team, they'll work with someone that's really starting their business journey.
And just to piggyback on what Melvin said, in regards to the type of typical client that would fall within the community lending segment, it would be someone who's been in business for at least 2 years. Revenues are just around $1 million, maybe a little more, a little less. And the borrowing needs are up to $100,000, as Melvin said. We also provide traditional lines of credit, as well as term financing, as Melvin talked about, within those dollar ranges that can be used for a number of things. Working capital can be used for financing accounts receivables, provide capital for growth. Term loans can be used for equipment financing, not inventory finance, but equipment financing, and anything that the business would need that would require a repayment of over a year or more.
So my question is, walk us through a typical customer for community lending. Go ahead.
So a typical customer would be someone who, as I said, has been in business for at least 2 years, probably have sales less than $1 million, and they are growing. They're growing rapidly, and they need financing. They are not ready yet to access larger loans. So what we do is provide them the capital that'll get them started. So one example is, and I'll give you a live example, right? We were introduced by one of our nonprofit partners to a minority business owned by a woman who is manufacturing pizzas. And she had an opportunity to get into Whole Foods and be a part of their program, but she needed the capital to be able to produce the goods to meet the numbers. So we worked swiftly and provided her a line of credit for $25,000, which enabled her to meet the requirements to participate in the program by Whole Foods, and now she's up and running, right? And what we did in addition to providing capital is we provided her with the banking services that accompany that. So what that means is we provided it with the proper and correct checking account and the services that go along with that in regards to payroll services, treasury services, all of the products that make sense for a small business owner to have that will help them run their business.
Good. Can you give us an example of one of your customers? What would they look like? Who you were able to help?
Absolutely, Chavez. And thank you again for the invite and the Asia ARG inviting me to this event. To give you a little bit about business banking, I'm the New York Business Banking Sales Manager, overseeing the 5 boroughs, Long Island and Westchester County. In business banking, we typically work with businesses with revenues between 3 to 25 million, as previously mentioned. What we really do, though, is prioritizing establishing robust relationships that help our customers streamline their day-to-day. We take the time to understand the nuances and needs of our clients, tailor solutions specifically for them. We assist our clients with their operating, payroll, savings accounts, as well as with any credit facility needs, as we discussed, right? Working capital lines, equipment financing, and owner-occupied mortgages. But more importantly, and this is something I want to stress, we're here to grow together, assisting our clients as their business journey continues, while leveraging and making the connections with our internal bank partners to ensure there's a team approach and multiple points of contact for the client to reach out to ensure we take the client to the next level. An example of this that comes to mind is an entity that we onboarded earlier this year. This client is in the HVAC plumbing space, and he was seeking an owner-occupied mortgage as he outgrew the space he was leasing. After speaking with him, reviewing his financials, and asking to be introduced to his accountant, which is key, I can see that this customer grew exponentially through the pandemic and post-pandemic, increasing from 3 million to 6 million and now close to 10 million in revenue as we approach year end. He was able to find the warehouse space with the ability to park his growing fleet of trucks, and we were able to finance that property for him. But again, this is where taking the time to understand the client, his needs, and evolving journey comes to play. As we peeled back the onion, as they say, and become that trusted advisor to not only the client, but his accountant, we were also able to provide financing for additional trucks and counting through our partners at Highland Capital, which is a wholly owned subsidiary of Valley Bank, as well as a working capital line of credit for their day-to-day needs through the business banking team. And as all of this unfolded from the onset, an introduction was made to the local market manager and treasury officer to ensure the full banking relationship is brought to Valley, where the customer's operating and payroll accounts were established, as well as a business savings account to park any excess funds while providing a competitive interest rate. An introduction was also made to Valley Insurance Services to ensure the proper coverages were in place for general liability, property, and his vehicles, all while saving the client substantially with his premiums. And by the way, although the referral was not needed in this case, Valley also owns a premium finance arm, which allows clients to maximize their cash flow by preserving capital and retaining funds by financing their insurance premium over a period of time. My point of all this is Valley has the tools and capabilities to assist our clients in all facets of their business. We don't want to be something for you at Valley. We want to be everything for you, just like we are to this client.
Thank you, Melvin. So what I really hear is that we start somebody and start helping a business, and the entry point is community lending. And the whole point of community lending is to graduate them to business banking, while working with all our partners in our bank and bringing all different aspects of, so to speak, help from all different partners like insurance. Melvin, you mentioned treasury services, market manager, deposits. So, I think at this point, thank you for your presentations. I'm sure there'll be questions at the end, so stick around. And our next segment, I would like to pass it on to Gianni from Private Banking. He's the Wealth Relationship Manager of New York. Thank you, John.
Thank you.
Good morning, Chavez. Good morning, everybody. Thank you, sir, and thank you to Valley and Asia ARG for the opportunity to be here today. I really, really appreciate it. My name's John, and I'm a senior private banker representing Valley's private bank. As a private banker, I routinely help our customers with their various wealth management and private banking needs. We often work with business owners on the personal side of their banking needs and priorities. Our unique wealth management capabilities are comprised of several different services and delivery models. So first and foremost, we have our brokerage division, our brokerage arm. This division allows us to offer a more customized yet open architecture brokerage solution to our clients. Utilizing this platform, we're able to review the client's existing portfolio. We can recommend enhancements to the client's investments, taking into account each client's unique risk profile and perhaps their different time horizons. Here on the brokerage side, the account can be either directed by the client to us for investment purposes, or they can be advised in conjunction with the private banker and the client. So the relationship is custodied with an off-bank balance sheet at our brokerage division. And so the portfolios within the private bank are not hypothecated or commingled with other individuals or institutions' assets, which is important. Through this platform, I can offer almost any financial solution available to our clients in order for them to reach their unique goals throughout their life for investment purposes. When businesses seek to invest their excess liquidity in the market, so if they have some funds on the sidelines that they're thinking they'd like to invest to get an increased yield, perhaps in a treasury bill or another short-term investment solution, this is the platform we utilize. We can assist in creating short-term investment duration ladders for these clients to help achieve their income goals. The private bank also has several discretionary wealth management platforms that our customers and clients utilize. The first platform that we utilize on the discretionary side is an exchange-traded fund model that's customized according to the client's risk profile and their unique time horizon again. So clients who wish to invest in the stock market often utilize Valley's investment knowledge and acumen to help them achieve their financial goals. This is a discretionary platform, which means our portfolio management team will choose the investments in the portfolio according to that client's predetermined investment policy, right? So we also have our Valley Wealth Management investment arm, which offer clients the opportunity to invest in individual equity securities according to our investment research and our value investment philosophy. We have a 20-year track record plus in these strategies, some of which are a core strategy, a dividend strategy, a growth strategy. Again, the investment mixture of stocks versus a fixed income allocation is adjusted based upon your comfort or our client's comfort with the strategy's risk profile. So each client, in conjunction to these portfolios, has the ability to lever their portfolio within the private bank. So we often offer loan-to-value facilities against the investments in their portfolio. A lot of clients use these lines as a way to obtain financing for a project they're undertaking. An example might be this line can be utilized to repair or upgrade your client's home, their homes, or they're looking to purchase a vacation home or something to that effect. Interest-only payment makes this a great flexible financing option for our clients. So if you're looking to take a loan utilizing the investments as collateral, the private bank is the solution for this particular product. Importantly, housed underneath the private bank is also Valley's trust department. So Valley Trust often serves as trustee of any personal trust that a client has. Valley Trust can serve as corporate trustee or co-trustee of any personal trust, which could be a revocable, irrevocable, charitable, or even a special needs trust, which is often created for individuals with a handicap or special need. So our trust group also serves as executor of clients' estates. When a client doesn't have another option for this, Valley is often asked to serve as executor or even co-executor with the surviving spouse. Investments of the estate or the trust can still be processed through Valley's wealth management platform. The trust department can also help our clients with unique trust services for elderly folks, which includes helping pay for their bills when they're unable or unwilling to do so, filing the trust taxes for the clients, and keeping a client's estate out of probate court, making certain the client's last wishes are met. Our private bank offers also customers our estate planning or financial planning expertise. So clients often sit with a wealth advisor to discuss their individual ideas and situations. For estate planning, we'll develop a roadmap for our clients to give to a trust and estate attorney to draft. We don't practice law, but we can have those deeper discussions with our client to get their thoughts on paper, put them on a flow chart, and then give them to an attorney to draft. It often helps them with all aspects of their life. Our financial planning team helps put them through a financial plan in place and execute said plan. It's really the follow-up and execution of the plan that matters the most, because a lot of people will go ahead and they'll create the plan, but then never put it in place. And it was as if you've never done it before. So often as part of that plan, clients will come to the private bank to discuss an insurance solution. So we have really good capabilities on insurance to review the client's situation, recommend a proper life insurance solution that would meet their specific needs. We even offer to finance the insurance premium for our clients who happen to need or want to buy larger policies. Within the private bank, we also offer swaps, derivatives, our robust FX desk capabilities. We have really good breadth, depth, and scope of services. The private bank has a national footprint with offices in New York City, Westchester, New York, Long Island, New Jersey, Chicago, Florida, and Los Angeles. So each client's situation is unique, and often their own situation requires a professional to give guidance as one life's changes over time. Frankly, if someone wanted to ask me what we do best, we're experts in listening to our clients and advising them on any wealth management need they have as they grow from starting a business, going to more affluent, getting to more of a cash intensive business where they're saving money, moving them through retirement, and then passing on to next generation. So we do have minimum account sizes to qualify for the private bank. That's usually a little bit more robust in the $500,000 range. The partnership that one will experience between a private banker and our clients is usually one that lasts over many decades. We provide our clients with really, really good expertise to guide them through almost any financial decision that they would make going forward. My particular team strives for a really first-class service and a first-class delivery model. So we aim to really, really advise and help our clients and give them the best holistic, but best advice we can. So that's a really good yet brief overview of what the private bank does. I'd like to thank you for this time and opportunity. I'd like to now pass it over to Austin Schneeloch, Structured Products Junior Financial Analyst. Austin?
Thank you, John. Good morning, everyone. My name is Austin Schneeloch, and I work on the derivatives desk here at Valley Bank. My team and I specialize in interest rate and foreign exchange hedging strategies, which we utilize to help our borrowers minimize their interest rate and foreign exchange risk. Just to start off today, we'll start with interest rate hedging, which has been essential for Valley in hedging, helping people protect its customers from interest rate volatility. What you're seeing here is a list of some of our products and strategies that we utilize to help give our borrowers peace of mind in volatile rate environments, especially a period of time like the one we've been in the past 18 months or so. For the sake of time, I'm just going to give a brief explanation of some of these products, starting with our first derivative product known as an interest rate swap. An interest rate swap is a derivative product where two parties agree to exchange interest payments, most commonly a fixed float payment. Our team utilizes interest rate swaps to synthetically fix our borrowers' rates, given Valley doesn't typically fix commercial loans for longer than 5 years. For clients who are eligible, they can enter into a swap contract, which is used to fix the rate of their floating rate loan, eliminating all interest rate risk and guaranteeing a fixed monthly payment. Swap rates are also based on a forward-looking curve, which, due to the current inverted yield curve, causes the rate of the swap to be lower than the underlying index rate. One of our most commonly utilized indexes is 1-month term SOFR. To elaborate a little on how the forward-looking aspect affects the rate of the swap, essentially, if rates are anticipated to fall in 5 to 10 years, for example, The rate of a 5, 7, or 10-year swap would be discounted in comparison to a shorter term swap, such as a 2 or 3-year term swap. A strategy we often apply to a swap, especially in this environment, is a forward starting swap, which is just a regular swap that we execute now to become effective at a later date. The reason to do this is to take further advantage of the inverted yield curve. And our swap model will account for that and create a lower rate for the borrower for when the swap becomes effective in 6 months, a year, or any time that the borrower specifies to push out the start of the swap to. We also have the capability of doing a forward swap on a loan that hasn't closed yet, and this is known as a rate lock. The borrower can simply lock in their rate now and take advantage of current rates for a loan that they may be closing in the future. Another product we've seen a large demand for in this environment is a cap. For an out-of-pocket cost, the borrower is simply getting the benefit of adding a cap strike rate on their floating rate loan. For example, if the borrower had a cap at 5% and rates were at 5.50, they would still be paying 5%. If rates are beneath that cap strike rate, then the borrowers will just simply get the benefit of participating in those lower rates. The last interest rate hedging product we'll be touching on today is a collar. A collar is a combination of both a cap and a floor, which enables the borrower to float between a cap strike rate and a minimum floor rate. I like to imagine it as like a band that the rate can bounce in between. This allows the borrower to benefit from the protection of the cap while setting a floor as to how far they can float down to. The floor on a collar helps reduce the out-of-pocket cost versus simply just purchasing a cap. Our goal at this desk is to put the minds of borrowers who are worried about rate risk at ease. We do this with our wide variety of interest rate hedging products and strategies to where we can customize and tailor a plan for each individual borrower looking to minimize risk. And now, similarly to interest rate hedging, as I mentioned earlier, we can offer a wide variety of foreign exchange hedging products and strategies to help our customers eliminate currency risk. Our team is constantly staying up to date on the FX scene by making trades daily and watching live rates via Bloomberg. And since our acquisition of Bank Leumi, our services and expertise within the group regarding to FX has grown exponentially. The first avenue of FX trading is spot trades, which is a standard and most common form of FX trading. It's just an immediate exchange of two currencies at a determined exchange rate. Funds are settled in up to 2 days. So for example, these would be used when we have a customer that needs to transact with a vendor, for example, in euros by tomorrow. They can get their funds quickly in a spot rate at the market. We also provide forward contracts for both deliverable and non-deliverable currencies, which allow those who are looking to transact today in a specified currency to lock in at a set exchange rate for a later settlement date. This is useful as it mitigates currency risk, as well as opens up the opportunity for advantageous pricing with a vendor for dealing in local currency as opposed to US dollars. You can see which currencies are deliverable and which are non-deliverable on this slide. A company has a payroll, for example, in a different currency and wants to lock in an exchange rate now for a month out, rather than have rates move against them when they have to make the payments in a month's time. Foreign exchange is a great service for anyone who is dealing in business globally, looking to hedge their currency risk. It's an easy way to receive and make payments officially. We are actively expanding our services in this department as we recently started offering foreign exchange options, for example. And we are looking to offer more in this ever-growing market. With all that being said, that about wraps it up for my team section of this presentation. Even after the question section of this call, if anything pops up in your minds afterwards, we encourage everyone to reach out with any questions regarding these products and strategies. We offer even more strategies and products that go into even more detail than we did today. So if you think that is something that might pertain to you, please reach out. Thank you.
Michael, you're on mute.
Thank you. Thank you, Chris. And thank you, Austin, and the rest of our presenters. It was great to hear about our small business lending practices and innovative products at Valley. Hello, everyone. I'm Michael Evangelista, Business Banking Portfolio Manager with the Business Banking Group. I wanted to invite all the panelist members to come to the screen, and just wanted to go through and hear all the excited questions from our audience. So yeah, I wanted to open the first one to everybody. There was one that came in. What role do you think our government policy plays to help us, a bank, to help improve the access to capital for minority and women-owned businesses? Melvin, do you think,
That would
and
be for Mike.
Chavez?
That would be for Mike Warrington.
Ah, gotcha.
Okay, so the government policy is important in what the bank does in general, right? And we have something called the CRA, which is Community Reinvestment Act, which is run by the government, and it checks up on what the banks do. And that role is played in community lending is they monitor the number of loans that we do, who we lend to, what type of loans we provide them, right? So it gives us guidance as to how to structure our products and who we can offer them to, which is why we created the community lending loan segment. And as Melvin said, you enter the bank through our part for your business loans, and you graduate into the next segment, which would be business banking and so on and so forth. So they're very active in what we do. I guess the next two questions are probably for me as well. Okay, so the next two questions, well, actually there's three, I'm gonna combine them, right? What role do you think financial education will play in helping women and minority-owned businesses make informed decisions about their finances? And the second question into that is, what are some tips for minority and women-owned businesses? You know, how do they improve their chances of gaining access to capital? So education is key for the small business owner. And it's not financial education as much as it is knowing your business, understanding the numbers that you are presenting, right? And what's in them, and also being able to articulate what it is that your business does, how the funds will be used, right? How it's going to help you grow your business, right? So that's really important. And I will tell you that when we're talking to our small business owners, we also partner with nonprofit organizations in each of our marketplaces that provide services to the business owners that allow them to gain that information and just put it in context so that when they're presenting to a bank, it makes sense. So our nonprofit partners will help small business owners prepare a business plan, to help them think through their projections, to help them get their financial information in general together. And it'll also help them with things such as marketing, not marketing plans, but such as networking activities, and whatever it is you need to grow your business. So that's key, right? Tips that will help small business owners, women and minority businesses gain access to capital is understand, again, I'm a little repetitive, but understand again what you do, how the money is going to help you grow, right? And how you're going to repay it. And as a community lending banker, we'll have conversations with the business owners about these things to help them understand the needs and importance of that. We'll guide them with these questions, right? So that when they do apply for a loan, they'll have a higher chance of success. We'll explain to them what we look at in making a credit decision, what the information is, and how it impacts their business, and why it is what it is, and as a banker, what it means to us. Melvin, do you want to add anything to that?
Yeah, I mean, it's so critical at the early stages for them to really surround themselves with the right people so they understand what the banks are looking for, to make these credit decisions. Far too many times the advice received is, how do I save on paying my taxes? How do I avoid doing this or doing that? That's not the right mindset, right? And the mindset should be, how do I get to the next level? What do I need to do? What steps do I need to take to get there? So, being involved with some of these nonprofits and Mike pointing them in that direction really sets the building blocks, right? The early stages for these clients to graduate, right? And get into community lending, move on to business banking, CNI, CRE, whatever the case may be, and allow them to grow. So super important from the onset to ensure you have the right team, the right partner with you.
Yeah, Mike, there was another question that popped up in the chat, which I'll talk to real quick. And the question was, for community lending, what is the credit criteria, credit score, and profit percentage that's necessary for a loan? And that's an important distinction. When we created a product in community lending that is based upon how the business owner has managed their personal credit, right? Not just the balance sheet and the income statement and cash flow numbers and debt service numbers, but how they've actually handled the credit that's been given to them. We'll take a look at the maximum amount of credit or total credit that they've had personally, car loans, credit accounts, student loans, houses. How have they handled that? How have they managed that? And based on that, we'll be able to make a decision as to whether as to how much money we can lend, right, for whatever purposes that they have, right? And that's a little different than what Melvin and his team does, and I'll let him talk to that because they're looking more at the balance sheet and the income statement for making their credit decision. Melvin?
Just to piggyback off of that, how important is that Valley has a program that really thinks outside the box, right? And is able to go into, not our traditional means of looking at a tax return, looking at financial statements, breaking down balance sheets and P&Ls, but actually looking at the person itself, seeing the credit worthiness of that person to be able to lend to them to community lending. Not all banks have this type of program. We do here at Valley, and Mike and his team does an incredible job with that. With regards to business banking, obviously we try to ensure we have businesses that are in line for at least 3 years or more, or in business for 3 years or more. We of course want to take a look at their stages, right? Their journey for those years to ensure they continue to grow, use that net profit, that revenue net profit, and see their big story. How do we help them? What do they need? But again, we go more on the traditional route to ensure that the finances allow, to pay back whatever the credit need is being asked for.
Thank you, Melvin. Oh, go for it. It looks like it keeps going.
Yeah, I'm sorry. And I'm actually going to ask Chavez to address this question because the question is what deposit products we currently recommend for customers or small businesses. And I know Chavez is an expert at that, so I'm going to ask you to answer that, Chavez.
So basically, like any other bank, we have all the various deposit products like checking accounts, or if they need to park their deposits, we have high interest rate that we offer to our business and personal clients. I think we have treasury services, we have online banking, we have all the technology, major technological advanced products that are available at this day and age, which is offered through any bank. We have very good and private banking. At any other bank, they have to have multi-million dollars before they can even get exposed to private banking. In our private banking, and I would certainly let John talk about it, the entry point is like $1 million. Doesn't happen in another bank. Is this true, John? Would you want to elaborate?
Yeah, so we have a lower entry point. Our account size is still $500,000, but we really are trying to add value to a lot of our clients. And we're really just trying to get them on track with the proper discussions around savings, around investments, around titling of assets, around risk profile, risk time horizon. Do we need insurance? Do we not? Do you have a plan in place? Do you have a financial plan? And then importantly, what happens when something happens and a bump goes in the middle of the night and the wheels fall off the bus and you need to pivot and adjust? And so we're frankly here to help with all of those questions and capabilities. I mean, each client's situation is unique, right? But I've been an advisor for 25 plus years. Most of us here have been. So we've seen a lot, we know a lot, and frankly, we're just here to give the best advice and help to the clients who need it at the time.
Yeah, and just to add to what my colleague said, it's a provocative question, right? What type of deposits would we offer? Going back to what I mentioned earlier, we spend a great deal of time on diversifying our services and products, and we have an extensive suite of deposit products that are positioned to meet, I would say, most needs. If we don't have it, we're also very nimble and we can create new products to meet your needs. So we go so far as to also making fully FDIC insured products available to our clients. So I like to think of our capabilities and our suite as being leading the herd rather than trying to follow it.
Thank you, Chris, for that. And we had another one come in, and I think this one's for Melvin. Can you discuss on the business banking side, loan size, and what's the maximum, and probably more or less what's the range for it? And additionally, do you work with the SBA? And if so, what's generally needed to start off with the SBA?
So, just to piggyback a bit on the deposit products, and certainly, our branches are capable to break that all down for you, but we do have a slew of business banking products or business checking products that gives you the ability to have, say, I believe 500 transactions for free. We have women in business checking accounts so that we can provide to those clients, where we even open our facilities, our meetings places in the branches for meetings for our clients as well through the women in business group. So we do have a slew of products, and certainly our branches can touch on that deeper once you obviously go visit them. With regards to business banking, our typical size or typical ticket size is probably around 700,000 or so. But we'll look at any credit facility over 250,000, and our max, I mean, although it varies, we certainly can go up to, say, even $5 million. But again, our true niche is probably those credits between, say, 250 and $2.5 million is really where we stand. With regards to SBA, I think it's important that we realize that, I stress to my team, and I know my counterpart in New Jersey does the same. We go out as a team, right? So if there's an opportunity where a customer needs some sort of lending facility, and obviously we're looking at this thoroughly and reviewing it beforehand, and we feel there's an SBA component to this, we'll bring the Treasury officer with us to these meetings. By the way, Valley is a preferred lender to the SBA, so we have a leg up in that we're able to review those financials and do those structure those deals in-house. And again, when it comes to the SBA, we'll bring our SBA partner with us, and we'll ensure that she's a part of the journey as well when we're having these conversations.
Thank you, Melvin. And emphasizing, we do have our internal partners to work with a client to fit their needs, right, Melvin? Pretty much.
100%, Mike. You're well aware. As a matter of fact, I will tell you that I was in a meeting yesterday for a large marble granite business in Brooklyn. And, we went out with the market manager, we went out with the local business banker, we went out with the portfolio officer. I was there as well. And I want to emphasize that, right? There really is a team approach in what we do. We want to make sure, as I said earlier, there's multiple points of connectivity for that client. We want to make sure that they feel that they can reach out to any of us to ensure that we're here for them, right? We want to make sure they have that support. And that really differentiates Valley, right? We really want to be that the bank that you can reach out to, you can ask any questions you have and point you in the right direction. And having that capability really differentiates us. One thing that Mike Warrington, actually, I've taken from him in years past is, one of the opening questions he has is, who here has a bank? Who here has a banking account? And everyone, of course, will raise their hand. But the next question is, if you run into a problem, if you have an issue, who do you call in that bank? Oh, everyone's hands goes down. No one has a trusted partner. No one has that banker to call directly and say, hey, Mel, how can I help? How can you help me? What's the questions? How can you take me to the next level? I'm running through this issue. What do you advise? And if I don't know the answer, I'll pull in a community lending officer, an SBA officer, if it's treasury related, or even for John Gianni, whether, if there's something in that area that we need to do. So that's really the ability to pivot and have that team backing you up is huge. And that's what we bring here at Valley.
Thank you, Melvin. I wanted to move on to the next question. Austin, I think this question might be for you. How would economic events affect foreign exchange rates, and how does the FX team stay informed about global events?
Yeah, so as previously mentioned in my presentation, we have Bloomberg terminals here. We're constantly checking live rates. We have customers that are dealing in all different types of currencies, so we constantly have to keep an eye on those and reach out to them whether they have deals that they anticipate going through. And we'll say, hey, we just saw we had a big movement in this currency. We're constantly staying up to date on current events. For example, everything that's going on in Israel has strongly affected ILS, or the Israeli shekel. So we're constantly on top of that. And just to piggyback off of that question to the next, I saw in the Q&A box, there was two questions for me. The first one being that, are there any regulatory considerations for business using foreign exchange and interest rate swaps? And yes, for doing foreign exchange derivatives and interest rate derivatives, there is a consideration to look into, and that there is a Dodd-Frank requirement that they have ECP requirements to enter into, which is just to have a $1 million in net worth or 10 million in assets for clients that are looking to do foreign exchange forwards or interest rate derivatives. They also asked an additional question, that what are some common mistakes that businesses make when using foreign exchange and interest rate swaps? And it's more so just being hesitant with getting into a hedge. To bring up what's going on in Israel again, prior to all that happening, if anyone wanted to hedge an Israeli shekel deal, and they were hesitant to do it because of the rate, and they didn't get into it at that time, and then everything occurred in Israel, and now the rates are much worse than they would have anticipated. And the same goes for swaps as well. Um, you know, 18 months ago, we thought rates were hitting their peak, and here we are 18 months later, and we're still looking at potentially another rate hike. So I would say hesitance is probably the biggest mistake in the hedging environment.
Thank you, Austin. So I want to open this up for all the attendees. I want to ask everyone, what are you most worried about regarding your banking relationship? And if you do have this question, you can always feel free to reach out to any of us on the panelists. But yes, and this last question, probably for Chris. What is the impact of technology within the banking industry, and how does Valley respond to these changes?
Thank you, Michael. Great question. It's probably a multi-pronged response, right? The first reply is, we've really seen the emergence of these non-bank, financial apps like a Robinhood and the such that have made access to what used to be referred to as traditional bank products readily available, and just on your phone, right? So I think that is, first and foremost, caused traditional banks to have a real robust online presence, a real robust mobile presence. And to that point, Valley has made a lot of positive progress recently to its valleydirect.com online banking suite, where we offer a high yield savings account, among other products out there, in a real seamless environment. And then secondly, and I think this emerged earlier in the year, where technology is really challenging banks and financial institutions, is the speed in which information flows, right? And so you could think about, back in March when there was a lot of angst in the U.S. banking sector, and really information, both factual and not 100% factual, was moving through the virtual space. That influenced decisions. And so when we as an institution, we're a $61 billion bank, when we think about that, we rely upon our risk-oriented skills and principles, right? I spoke earlier about how well diversified this institution is on both sides of the balance sheet, right? So here we're talking about deposits mostly. That diversity of sources of deposits help mitigate that type of risk. We're not done there. We're highly aware at the speed in which deposits can move. But I do think that it's something that this bank and most banks will be more closely following going forward.
Thanks, Chris. And thank you for all our panelists for today and answering all these questions. I now turn it over to Jared for a close for today's meeting. Please, Jared, if you have any closing remarks.
Yes, hi, and thank you, Mike. Thank you everyone for the great questions, and also thanks our panelists for the insightful answers. So my name is Jared Shen. I'm from Model Risk Management at Valley Bank. I'm also the business alignment lead for the HARG. So first of all, a big thank you for all the speakers, Chris Forno, Mike Warrington, Melvin Madera, Gianni, and Austin Schneeloch for joining us today. I hope today's presentation provided valuable insights, leaving you with a deeper understanding of all the great products that Valley can offer. Also, on behalf of HARG, we would also like to extend our gratitude towards to Fazil Mohid, Chavez A1, and Michael Evangelista for their active participation, as well as Jackie McCarthy and the entire DE&I team. Please remember to check out the DEI page on DEI and HARG page on our Valley homepage to continue to learn and attend about our future events. Every associate is welcome. We invite all Valley associates to join us for the 5th installment of our Widening the Lens, sharing our perspective series, Navigating a Multi-Generational Workforce, later this month, which will be followed by our fourth Real Talk discussion. As always, every associate is welcome to these events. In the coming week, we will share the recording of today's presentation, as well as contact details of today's presenters in a follow-up message. So please be sure to keep an eye out for it. Thank you all, and looking forward to see you at future events. Have a great afternoon, everyone.
Thanks.